Hey everybody, this is Jim at SP500chart.com. It's about 4:15 on September 30th, 2014. Let's take a quick look at the chart after I remind you that the website and this video are for educational purposes only and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, we are looking at a 30-minute chart, and I'm just going to be working off of what I talked about yesterday. The idea that this top blue line right here is a line of resistance that, once broken, should send us back up to retest our neckline. Today, we came right up to that line, and you can see that that it has not been moved. Just so you think, well, maybe I cheat. This line was last moved on yesterday, the 29th. You can see it right there, and we came up to that this morning, and then immediately sold back. Now, remember yesterday too, I talked about the potential or the propensity, if you will, for there to be a midline when you have a descending wedge. Here's that midline, and you can see that today we twice bounced exactly, I mean almost to the penny on that midline. And again, just look, that line was created yesterday, so that's no fudging there. You can see there's a touch and there's two touches, then we started to come back up. Now here's the deal. With what we saw or what we've seen over the past 4 days, it appears to me that there is an area of congestion that is roughly about that sized. And where we end up going in the short term really depends upon which way we leave this area of congestion. We could leave it to the upside and break through this pattern, which I think will set up a move to the neckline, or we could move to the downside and end up testing some levels down in the 1950 or high 1940s. And that would not be really out of the question, because you can see that that falls within the range of both this descending wedge and our red important line of support. So we could break down through this and have a downward move of approximately 16 to 17 points, find ourselves, or even a little more, but that's about what the height of this congestion area is. And if we did that, we could still have a nice turnaround and then a bounce back up without having broken any important support lines. So guys, I think that's about it. We are still inside of this wedge-shaped area, and it looks to me that that there should be some built-in bullishness built into this shape just because of what they tend to do. But obviously this top line served as resistance today. We'll see tomorrow or Thursday or Friday at some point. We see if we can break out of this, and if we do, then I think we're going to go back up and retry our neckline up here in the 2020s somewhere. So I think that's about it. Honestly, today's trading was essentially the same range we've been in for 3 or 4 days. Nothing new. I just wanted to point out that we did find this line once again as resistance, and this little midline, for what it's worth, showed itself to be still something of interest, which lends I think, a little bit more credence to the idea that we are in a descending wedge now that should have a built-in bullish bias towards it. But that will not be confirmed until we break out of this resistance line. So guys, that's it. That's your video for September 30th, 2014. I appreciate you taking time out of your day to watch this, and thank you so much for your support. Let's see if we can get out of this wedge and get on to reestablishing a leg up, hopefully to confirm our inverted head and shoulders pattern that's now having a kind of a big right inverted shoulder. But still, let's see if we can do that, and if we do, then we'll be looking forward to something over 2100 as a minimum target. So guys, thanks again for watching. Take care.